Good evening, everyone. Ads here from Unity Trading Group. Welcome to the Monday update. Of course, before we begin, hit that like button, give us a subscribe if you can, and tick the bell to stay updated on all of our content that's coming up soon. Of course, we aim to stream 5 days a week. So this being number one, let's get right into it. But before we begin, I just want to point out something. www.unitytradinggroup.com/gravytrain. We now have Gravy Train with a 5-day, when it loads, 5-day free trial. So no obligation, 5-day free trial for Gravy Train. Of course, you can test it out. If you've always wanted to test it out without the commitment, you can do so. So www.unitytradinggroup.com/gravytrain, or you can head over to our homepage, hit the indicators tab up the top, and it'll take you to the store. But Gravy Train now with that 5-day free trial. Anyway, let's go. Let's have a look at BTC. Where are we at? So I've seen something along the lines of this being thrown around currently. It is quite loose and it is a little bit skewed, and I wouldn't say it's entirely valid. It is there. The pattern is there. But I don't know how much weight I would put on something like this. But in saying that, we have had a respected level of demand and we now have a respected level of supply. So the overall pattern, the overall area of interest that we've been talking about last week has come to fruition now. So we are now at 40K. I've been saying this in the Discord as well. So if you're not part of the Discord, join in the link in the description. We are going to make more of an effort, of course, to be in the Discord as of this week. We need to get the chat flowing again. So if you would like to start the conversation, if you would like to be part of the conversation, join the Discord down below. We have a lot of strong traders in there, and the charts do flow quite nicely when the market is ripe and ready for it. So the link is down in the description for that. But in this instance here, I'd be looking at this level of demand with quite a bit of a keen eye at the moment, and I will explain why. So this level of demand has been tested. This is the second time, third time pretty much in my book that it's been tested. We've had 3 here, sort of loose 3 there. We've just fell short to the right hand side here, and of course we are seeing this area now. So it wouldn't surprise me to see something along the lines of this play out. So if we're looking at where we're at, so we've gone 1, 2, and now we're here. It wouldn't surprise me to see the 23.6 retested for a movement to the 44 or 44K for BTC. The liquidity up the top here is where I would pick the next level of demand, just above us, or just above where we're sitting now at 40.41 at 44. That coincides very nicely with an overall higher time frame scale level of fibs at the 50. So something like that will probably be on the cards. We'll retest some of this liquidity here. Of course, you can see it all the way along the 23.6. Just below us is where I would pick that retest to occur. Now let's get rid of this for the meantime, and let's have a look at the level of fibs on a smaller time frame. So let's zoom in just a touch and see where we're at in the way of a level of fibs. So if we go fib retracement, let's go from swing low to swing high. Now, we're just in the middle of the 23 and the 38. So that's really, really important to me. And of course, if you've been watching us for quite some time, you'll know that when we do say we pull back, we usually look for the 38.2 at most. Well, in this instance, looking at the 38.2 would be the most relevant area for a pullback. That lines up very loosely with the 23.6 that I pointed out just now, and that does coincide nicely with the liquidity that we see to the left-hand side. When I say liquidity, I had a question in the Discord very recently. When I say liquidity, I mean price action. We're looking at the price action that is consolidating around these areas, liquidity. So we're talking about areas that will hold up the price. We see a lot of trading taking place in this area here, whether that be the 23.6 or the 38.2. You can see the relevance of both of those levels on the chart. So when I refer to liquidity, that's what I'm talking about. So zooming it back up to the 4-hour time frame, let's get rid of this very intermediate level of fibs. So we see the liquidity sitting at around that 23.6 and of course that 38.2 that we spoke about just before. And that would be the area that I would expect a pullback to occur to for a final decision on what we're going to do. And look, there's always the opportunity for BTC to ping pong in between the levels, form a range for quite some time. That could be another level that we look for. We're looking at the extremities of the market currently in terms of extremities being level of supply, over exhaustion on our level or our steamroller indicator down there. And of course, if you look at our homegrown RSI, we're looking at a 70, pretty much 70 respected as resistance on the top of RSI there. So a couple of things say that we're going to pull back at this area. If we're throwing on gravy train, we could see we have crossed up in the terms of an upwards movement. And of course, if we come back and pull back to the 23.6, we will still maintain our area above the cloud, giving us that green cloud formation forming over the course of the next week or so. So we'll see how we go, but you know my thoughts now. I'll be looking for a pullback towards that 23.6 to confirm that. And we're looking for the 50 RSI to be held in the immediate term. That would be a nice level of support for BTC. And of course, we're looking at steamroller to come down and not come all the way down, but we'll see if we can stay in the median cloud, gray cloud area of steamroller in the immediate term for the remainder of this week. But we'll revisit this on a daily basis. Next up, we'll have a look at ETH. ETH not faring as well, and that's a bit disappointing in my eyes because we were very excited about ETH over the course of this week. And let me just nip up this level of demand. It was probably meant to be there at the beginning, so not to say that the one I drew in was invalid. However, a level of demand was more relevant down here. So not to say it was wrong, but just a more relevant area for me as we have a retest of this level before we moved up. So not so much a mistake, but a more relevant area for me anyway. Next up, we'll have a look at ETH, of course, nipping that level of demand up. So just continuing what I was saying, ETH a little bit disappointing in my eyes because we were more excited about ETH than BTC this week. If you go back and watch some of our videos from last week, me and Ty spoke extensively about ETH and what we really thought would happen. We had our uptrend, and of course that got broken, and we retested the level of demand down here, as we see at 2,300, a nice round number. But we really need we really need ETH to follow BTC, to follow the USD lead and move up and back towards that 2,800 mark where we see our level of supply that's been tested for quite some time now. That'll probably come to fruition if BTC plays ball. If BTC comes down and retests that 38 or that 23 that we spoke about and then continues to the upside, we'll probably see a very similar scenario for Ethereum happening as well. So if we come down, retest our 23 again, and then move back up to our 28 or 2,800 and make a decision based on that market structure in the immediate term. Last up for this evening, we'll have a look at the Forex pair, the DXY. Of course, this is a regulated market, not financial advice, just ideas and opinions of us here at UTG. Not financial, of course, just educational material, as we usually say. But in this instance here, we have broken past our 90.235. Let's leave it in just for the immediate term. But we have pushed through quite substantially our level of supply, and we are being rejected off that and moving down now. But it's not out of the cards to see something along the lines of this playing out. We'll come back, retest our level at 90.235 and get a movement to the upside if we are to see one. And the area that I would be looking for, the area of interest for the DXY for me, would be a 90.80, where we've had the retest already once before. It is a medium term or low quality level of supply, so it is not that strong, and there is all the reason for us to move through this quite significantly and quite quickly to retest the liquidity at 91.2. So they're the two areas above us that I'm looking for. Of course, if we do come down and invalidate this, move through our 90.235, of course, again, I'd be looking towards our demand level at 89.72 for that level of TA there. Thank you all for joining me tonight, this Monday night. I know for us in Melbourne it is long weekend, so I am jumping on regardless of that. If you haven't already joined the Discord, down the link in the description, you can find Gravy Train at unitytradinggroup.com/gravytrain to get involved in that. Again, I'm Ads from UTG, and we'll see you in the next one.